In today's video, I'm going to be showing you guys a simple strategy that's going to blow your mind. This strategy has the power to locate price reversals and market trend changes, which leads to a lot of profits if traded correctly. This is no BS guide because due to silly mistakes, formal, no extra confirmation and lack of using this proper strategy, people often fail this strategy, which leads to the title of this video. With that said, let's jump straight into the video. Welcome to the Trading Blueprint. Welcome back once again to the Trading Blueprint, and today's setup we'll be looking at Quasimodo pattern. Yes, for most of you that don't know what Quasimodo pattern is, or if you know what Quasimodo pattern is, I'll be showing you more in-depth guide on how to get better entries. Why, if you don't know what a Quasimodo pattern is, it's simply a pattern that signifies the end of a trend, that is the reversal of a trend. Like most professional traders, they use this pattern very well to trade trend reversals, and most of the times they don't really say this pattern because they think that it's just something like hidden or you just need to know it, but actually people need to learn the Quasimodo pattern. And what is this Quasimodo pattern comprises of? Price make higher high, higher low, higher high, then a lower low. Once this type of structure forms, that means our Quasimodo pattern is in place. So the price makes higher high, higher low, higher high, and lower low. For the Quasimodo sell, once a low is broken, this is the higher low to the lower low is broken, then we set our entry at the tip of the left hand corner of the valley. Mind you, Quasimodo pattern has two valleys and 3 peaks, whereby the middle peak is the highest, always the highest, while the second peak, which is this one, the second tip is not always exactly with this peak. Now, why I say this is that most people might just set their entry here. Okay, let me use the real example. This is our short position. Most people might sell their entry here and put their stop loss somewhere here, take profits here, and they get taken out in the market because price can move forward to fill an order block here. If you don't know what an order block is, it's simply a price that has been set by big companies or banks to fill orders. I will explain more in detail in the next video I make. Right now, most people think that they should put their stop loss very tight, but in reality, the stop loss is meant to be above, slightly above the highest peak for the best results of trading Quasimodo patterns. Now this is for Quasimodo sell. Let's go to Quasimodo buy. Now, how do we know when to buy in Quasimodo? Price makes low, lower high, lower low, and higher high. Why did I say this? Because structure was broken, and once the structure is broken, we know that our entry must be at the left hand corner or the right hand corner of the second peak.
rather, which is right here. Place our long positions right there. Our stop loss slightly below the middle peak. Yeah, I don't know why. Okay. And I'll take profit targeting the deepest valley. This is the correct way we are to trade our Quasimodo pattern. So in case in this scenario of buy, price eventually comes to fill an order block within this range, it won't affect us because we won't get stuck. Once price passes below the middle peak of any Quasimodo pattern, then it is a failed setup. We just have to take our losses and move on. It's really natural to lose in trading. Now, most beginner traders may confuse themselves while trying to trade Quasimodo pattern, comparing it to head and shoulder. Now, let me show you a quick difference on Quasimodo pattern and head and shoulders. Now, one major difference is the symmetry. As you can see, Quasimodo pattern is more crooked in nature. It's slopey. While on the other hand, you can see that the head and shoulder is more symmetry in nature. That is one basic difference between trading Quasimodo patterns and head and shoulders. Now, for instance, Quasimodo pattern needs a break of structure for us to identify trend change. And one important aspect is the entry point, which is always at the valley, left valley. If we are either buying, it's going to be at the right valley, while if you are selling, it's going to be at the left valley. Why? The aspect of the head and shoulders, we have to wait for price to break the neckline before our entry is confirmed. So this is our point of interest. Once price breaks that point, that is where we take our entry. That is where we take our entry. Why in the case of Quasimodo pattern, is always at the left valley, left peak rather, stop loss slightly above and target deepest valley. While head and shoulders, stop loss slightly above the second shoulder, then take profit at a support level if you're selling. Now that's one major difference between Quasimodo pattern and head and shoulder. They are not equal in Quasimodo, while head and shoulders deal more with equality. Now let's look at an example I made on Quasimodo late retest. Now when I mean my Quasimodo late retest, this means that price creates Quasimodo structure, but as you know, price action doesn't go straight. This deals more with multi-timeframing, and maybe you see a Quasimodo pattern in one day. If you turn down to the 4-hour chart, it's not going to look as straight as one day chart. So Quasimodo late retest is still the same scenario. We see a break of structure. Once we see a break of structure, put our point of interest and we set our trade our sell stop. We set our sell stop. Now, as you can see, price doesn't always immediately rise and drops. Price plays around, making lower lows, equal lows, higher high, higher low, higher high, lower low, higher high, lower high, or higher low, before reaching our point of interest, then going to our favored take profit. This is always the case for Quasimodo late retest. It can also happen for the buy aspect. Now, one thing you need to know when trading Quasimodo pattern is that you must always check your market structures. Now, if you're trying to buy a Quasimodo pattern, buying must always be in a downtrend. While if you're trying to sell a Quasimodo pattern, selling must always be in an uptrend. Now, uptrend, this has been making maybe higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, before breaking the market structure. Once it breaks the market structure, our confirmation is set. Then we include our point of interest, which is going to be at the left peak. Once we include our point of interest, we put our sell limit or sell stops, then wait for price to reverse within the range before meeting our targeted take profit. Now let's look at these steps in the real chart. Okay, as you can see clearly, price is on an uptrend. How? You can see the higher highs, lower highs, higher highs, lower highs, higher highs, lower highs, higher highs, lower highs, higher high, then a lower low, which indicates the break of structure. We can see this, then we can just add a text so we shouldn't forget BOS, which is our break of structure. Now, once that happens, we set our point of interest, which is the left hand side or the left peak of the Quasimodo pattern. Then once it's set, we set our short position, placing our stop loss slightly above the highest peak, and our take profit is going to be the middle, but the deepest valley rather. Now let's see how this play works out. You could see price entered within our region. Price entered within our region at this area and took profit. Now let's look at some downtrend Quasimodo example. As we can see, price is clearly making lower lows, lower highs, 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 lower lows, and a higher high. This is to signify the break of structure in the market. Now, as we can see, price broke structure here, making this V-shaped point a valid entry. We place our point of interest at the right hand corner, and you can see price came back to test the area Now, place our buy positions there. TP, first valley, the deepest valley, stop loss below the middle peak. Now let's see how this trade plays out. Okay, so price dancing around before it eventually took take profit. Now, one thing we should note is that sometimes there are times that price might not give us opportunity to enter, which is very fine. That's to show that the quality of the QM Quasimodo pattern is not just sufficient enough, and it's good to stay out of those patterns and look for more high quality Quasimodo patterns to trade. And another example, another thing I want to highlight is that there are times that price might not eventually change direction fully. As you can see in this case, price broke this structure and it didn't go higher. Normally, Quasimodo is to make the trend change and to another direction. That is, if it's coming to a downtrend and a Quasimodo happens, it goes to an uptrend. That is why your take profit should always be the deepest valley. Price always reach that point because that's where the liquidity needs to be taken. Eventually, this Quasimodo pattern still change direction to the uptrend in the long run, but if we had held that trade, we would have been in a loss, thinking that the markets might still go down. That is one reason many traders still fail Quasimodo pattern. They don't set proper stop loss and their take profit, they don't target it. They just put it anyhow, which is why they don't prosper in the Quasimodo pattern. So that's how trade the Quasimodo pattern. Is basically a trend reversal pattern that could signify the change of a trend, and is a very, very effective pattern that I would like you guys to try out. If you don't really know how to set up high quality Quasimodo pattern, please watch this video to the very end. Okay, let's look at another features of this Quasimodo pattern I would like to discuss about. Now, it's called high quality Quasimodo entry. Now, let's say for instance we have a Quasimodo sell. That's where price makes higher high, higher low, higher high, higher low, higher high, then a lower low. Price then come back, break structure before we enter our trade. Now, most high profitable Quasimodo patterns are always V-shaped. That's if you see a pattern that maybe at this, okay, maybe at this tip it has a lot of equal highs, equal lows, equal highs, down, 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 equal highs and lows. Don't trade it. Avoid those type of patterns. Avoid those type of Quasimodo patterns because they are not predictable. They are not something that we are going to be sure of, because there might be a lot of liquidity that may be taken out and might just drive the market higher. Another fumble is maybe price make higher high, higher low, then takes a deep, a large pull up before coming down to make a Quasimodo pattern. And some people might think this is a Quasimodo pattern, but it is not a Quasimodo pattern. Avoid this kind of low quality setups. Don't make the mistake of trying to put your point of interest here and thinking that price will go down. If price wants to go down, the highest it might just go down a little bit before price makes his move to take out other liquidities and other blocks that have been sitting around maybe in this zone right here before going down. So it's not a high quality Quasimodo setup. Now, what is a high quality Quasimodo setup? Like we saw in that example, price make higher high, for Quasimodo sell higher low, higher high, break of structure should be preferably V-shaped, then our point of interest within this range before going to our direction. That is after we had already placed our trade. So that's it, guys. Thank you for watching today's strategy. I hope you use these strategies to make a lot of cash for yourself, and subscribe, like, comment. See you in the next video.